As of right now, with the U.S. markets closed prior to the opening bell on August 4, 2026, SMX, Security Matters plc, Nasdaq, SMX, stands at a closing price of $15.93 per share, after dipping slightly down by 2.81% during the most recent regular trading session. During that trading day, the stock touched an intraday high of $17.25 and a low of $15.60, with after-hours trading showing a tiny rebound toward $15.80. Looking at the ticker across active trading channels, Interactive Brokers trading feeds, and the Robinhood app, you might see a microcap company with a total valuation sitting around $15.5 million to $16 million. On paper, a single glance at retail platforms like SoFi Active Investing or Fidelity Brokerage might make this company look like an obscure penny stock that has survived multiple reverse stock splits. The surface story tells you this is a struggling small cap fighting dilution and regulatory listing hurdles. But the moment you look underneath the market noise, the actual mechanics tell a fundamentally different story about how physical supply chains are trying to interface with immutable digital ledgers. Most traders logging into their individual brokerage accounts or checking their Fidelity mobile app look at a stock moving between $15 and $17 and assume it is just another standard microcap play bouncing on tiny volume. The market narrative says SMX is a speculative, high-risk microcap that has bled market capitalization over the past year. In fact, if you look at historical charts on Robinhood stock trading or any major investing sites, you will see a mind-boggling 52-week high figure listed in the hundreds of thousands of dollars, purely a mathematical artifact of aggressive reverse stock splits executed to maintain Nasdaq compliance. The general consensus is that this company is a cash-burning startup perpetually at risk of delisting. But here's the reality that challenges that assumption. SMX is not just another software platform trying to sell subscription tracking software. They are building a physical-to-digital bridge using molecular-level chemical marking that literally cannot be rubbed off, melted down, or washed away. While mainstream retail investors on Robinhood Investments or SoFi stocks are busy chasing AI software wrappers, global industrial supply chains are facing massive regulatory shifts that demand absolute origin verification. When you track daily price swings and institutional trading volume on Interactive Brokers platform or Schwab Intelligent Portfolios, you notice something peculiar about SMX. The stock trades on relatively light average volume, often under 100,000 shares a day, which means small institutional buy orders or retail selling sprees cause outsized percentage moves. Over recent weeks, trading sessions have shown sharp intraday bounces off the $12.50 to $15 support levels, pushing back toward the $17 range whenever fresh updates emerge regarding their circular economy partnerships. For traders managing their own accounts through self-investing strategies or using Interactive Brokers account tools, this extreme volatility creates a sharp contrast between short-term tape reading and long-term tech evaluation. Institutional activity remains modest in absolute dollar terms due to the company's microcap footprint, yet the persistent accumulation patterns around major structural lows suggest that specialized investors are quietly playing a long-term option on global supply chain compliance legislation. To truly grasp what SMX is doing, you have to look past the stock chart and evaluate their underlying core technology. SMX, Security Matters plc, specializes in brand protection, material authentication, and supply chain tracking. Rather than relying on traditional barcodes, RFID tags, or QR codes that can be easily copied, altered, or physically stripped from a product, SMX embeds an invisible submolecular marker directly into the raw materials themselves. Whether it's solid plastics, liquid chemicals, rubber, or precious metals like gold and silver, their chemical markers become an intrinsic part of the physical object. These chemical signatures are completely non-destructive and can survive extreme industrial processes, including melting, refining, and recycling. When a proprietary SMX reader scans the marked material, an algorithm reads the embedded submolecular particle code and links it directly to a blockchain-backed digital ledger. This creates a permanent, tamper-proof digital twin of the physical material throughout its entire life cycle. If you're following this company through your Fidelity Wealth Management dashboard or checking individual stocks on SoFi Invest, leave a comment below telling me if you hold any shares of SMX stock in your portfolio, or if you prefer sticking strictly to large-cap tech. The business model behind SMX revolves around licensing this technology to major brand owners, raw material producers, and industrial manufacturers who need to prove the authenticity and origin of their goods. Think about the massive pressure on global corporations right now. Regulatory bodies in Europe and North America are mandating strict rules on recycled content, ESG compliance, conflict minerals, and anti-counterfeiting measures. A tire manufacturer can't easily prove that 30% of its rubber comes from sustainable, recycled sources just by showing paper receipts because paper documentation can be forged. But if the recycled rubber contains an SMX molecular marker, a quick scan at the port or manufacturing plant provides instant verifiable proof of origin. The company operates a high-margin technology licensing framework, earning revenue from the sale of the physical markers, specialized reader hardware, and recurring software access fees for their blockchain data platform. However, the historical financials reveal why the stock trades where it does today. Looking back at recent annual filings, SMX reported significant net losses driven by high research and development expenses, public listing costs, and commercial scaling overhead. Cash flow from operations has historically been under intense strain, forcing management to execute repeated capital raises and structural adjustments to keep the lights on. For users running stock screeners on Robinhood app, SoFi Active Investing, or standard online investing platforms, seeing negative EBITDA and thin revenues often acts as an immediate red flag. The market expectation was that SMX would quickly land massive commercial rollouts with Fortune 500 companies right after going public. The reality was that industrial adoption cycles for deep tech and raw material marking move at a glacial pace. Industrial clients require years of testing, pilot programs, and supply chain integration before committing to full-scale deployment. That discrepancy between rapid market expectations and slow industrial reality is precisely why the stock experienced severe downward pressure over the last year. Yet when you look at the future outlook, the equation begins to shift. Catalyst potential is heavily tied to global regulatory deadlines surrounding circular economy mandates and digital product passports. As governments enforce stricter rules on plastic recycling and carbon footprint tracing, major global brands will be forced to adopt molecular verification systems to avoid massive regulatory fines. SMX has already established pilot programs across precious metals with its True Gold initiative, as well as joint efforts in the fashion, plastics, and energy sectors. If even 2 or 3 major global manufacturers transition from pilot testing to full commercial implementation, the revenue trajectory for a $16 million market cap could re-rate dramatically. The risks, of course, remain substantial and must be weighed carefully by anyone utilizing an individual brokerage account, Robinhood stop trading, or self-investing tools. The primary danger is ongoing dilution. If commercial revenues don't ramp up quickly enough to cover operational burn, SMX may be forced to raise additional equity capital, which dilutes existing shareholders and places fresh overhead resistance on the stock price. Furthermore, small-cap companies trading at low valuations face persistent risks of regulatory non-compliance regarding minimum bid prices on national exchanges unless they maintain positive operational momentum. When you synthesize the market dynamics, expectations for SMX stock were built on the belief that it would either scale instantly or fail under the weight of its own burn rate. The reality is far more nuanced. SMX sits precisely at the intersection of physical manufacturing and digital asset tracking, holding unique intellectual property in a market that is increasingly dictated by supply chain transparency laws. For investors using Fidelity Brokerage, Interactive Brokers Fees tools, or SoFi Robo-Advisor portfolios to build out speculative tech allocations, SMX represents a high-risk, high-upside play on the physical Internet of materials. The stock price near $15.93 reflects past capital structure pain, but its future hinges on whether global industry decides that molecular authentication is no longer optional.